CBS News used to be referred to as the Tiffany Network. It was because it was the most popular network with the most shows that people wanted to see, as well as the most respected news journalists. In when I grew up, most people would watch one of three news channels. That's all there were, three networks. CBS was the leader. Walter Cronkite, if he said it, it was considered truth. How far they've fallen from that part. It is no longer true that these news organizations are focused on giving us the correct information, but more importantly, they're giving us information they want us to have. I'll show you why. But before we get into that, I'm Bill Gross. This is my weekly review of real estate industry, both good news and bad news where the market is. Let's get into the numbers and we see where the market is. There's always two factors affect in any economy. There's supply and demand. Demand in real estate would be driven by interest rates, which are causing buyers to either be more aggressive or less aggressive based on where they are, and supply, which is the inventory. Let's take a look at the demand numbers first. So on the mortgages, we see that the mortgage rates have been almost always between 6 and 7 all year long. They had jumped above 7 a couple times, came right back down, but last week started above 7 and stayed above 7, importantly, ending the week at 7.14%. Now, that change in and of itself isn't dramatic, but if this is a precursor to an increase over time, that increase will drive up the cost for buyers and drive down demand. So we have to watch the rates closely. We're either in line for a correction or this is the new normal, or if rates are going higher, it will affect the market at that point. It's not yet. I'm not predicting it, but something we have to pay attention to. On the inventory side, though, for sure continues. There's no way to have a housing crisis, and there's not too many houses to sell. Take a look here. You can see the inventory. This turquoise number is now below the inventory from 2021, which was the record low, below last year. So we have the lowest inventory in history. Now we have more people than ever in America, and we don't necessarily have a lot more homes. We have more homes than ever, but we have less homes for sale now than at any time in history, both during the pandemic and for it. And you can see that trend has been declining when the prior year, last year, it had been increasing. What's that mean? Well, as long as there's not a lot of houses to sell, there can't be a drop in prices. And the reason why, one of the factors we talked about was with the low rates on the books of homeowners now, they don't want to sell because they can't afford to or don't want to give up the great payment they have for a higher payment on their purchase. So this is likely to continue, that we have limited inventory, which will mean prices have hit there's a bottom below which they're not going to go below, and we see prices continue to go up. What's that mean on our market in Los Angeles overall? I love Altos Research. They do a snapshot, and they show that in Los Angeles, we have a ranking of 44. It's been there for a month or two, off or on, pretty much consistently. What that tells you is the market's been consistent. One of the key factors I like to watch is the price per square foot. It had been rising pretty steadily. It took a little bit of a downturn last week, but overall, what you're paying to get a house, a square foot of house, is going up. That means prices are likely to go up as well. So overall, excuse me, our market is in really good shape here in Los Angeles. Remember all the predictions about gloom and doom. Remember the housing crisis videos that were on the YouTube regularly. What happened to them? Well, now we can look back and see what's happened over the last year or two or longer during the COVID period, and now what I would call the post-COVID period. One source I read regularly, I disagree with some of the stuff, but he does a good job here for sure, is Lance Lambert, who is with Fortune magazine. He quotes some Morningstar data and shows that over time, housing values, now on the left is existing housing, on the right are new housing, but they both have the same pattern, which is that the prices have gone up. They skyrocketed during COVID, and they give back some of that as a correction, but are continued to predicted to continue this long-term rise of value of 3% to 4% year over year, both of resold homes and on new homes. So as long as that's the case, as long as cost per square foot go up, as long as the price that sellers can get per square foot goes up, housing prices will maintain a 3 to 4% annual appreciation. And the housing bust we've been told about overall doesn't look like it's anywhere in the horizon. Again, all bets are off if we have a war in China or Ukraine or Russia blows up. But based on where we are now, the data does not seem to support any kind of housing bust. There's not enough houses to have a bust, and the long-term trends seem to be back to a 3 to 4% appreciation over time. Now, I love on my weekly videos to call out bad articles from bad players, which I think are misleading. One of the regular participants is Redfin. Here's their latest contribution to bad articles. The average U.S. home is selling above its asking price for the first time in nearly a year. That sounds dramatic. Now, again, keep in mind that the last year or two, a year ago, 2 years ago, we were in the height of the pandemic, and now we're kind of coming out of it, or whatever you want to call that. But what they're trying to make it sound like, oh my gosh, housing prices are selling above asking price or asking price, and that is tremendously significant. Well, it's not. Even in fact, their own article, when you scale down and look at the number of homes that have sold um, over 1%, I'm sorry, over 100% of the asking price, you'll see that the number that's sold above final listing price is kind of in the middle between last 2020 and then below 2021, 22, which were COVID years. And if you plot the graph, this is about the same or a little higher than the historical standards. So we're kind of returning to a more normal number where most homes sell for pretty close to the average. Here's another example. Um, Average homes sold for 101% of the market. Again, the list price. Again, COVID was unusual, and we had these periods of time where homes sold for an average 2% over. That's because there was such a crush of demand that sellers couldn't raise the price fast enough. And now that's cooled off a bit. But you can see that overall, the market is coming back to a more normalized price, closer to what the asking price is. And so it's well off the numbers from a couple of years ago, not even close, not even worth mentioning, in my opinion. And so I think, again, that's just an article that is a headline grabber to get your attention, but really doesn't have much significance. Another, I think, bad article is Zillow, regularly with misleading. And theirs is affordability crisis. Oh my gosh, it's a crisis. What should we do? It's a crisis. Well, it's not really a crisis. It's a decision that's been made. What they show is that we have 4.3 million less homes built than the population over the past period of time. And that's unfortunate for people looking to buy a house. But this isn't a crisis. This is a policy decision by certain cities and states not to build homes. They've decided, I live in California. They've decided in our state not to build many new homes. They raise the prices with regulations. They restrict the water. They restrict electricity. They do everything they can to build less homes. Now, I don't know where. I think the politicians would like everybody to be in rental units, high-rise rental units in the city next to mass transit. And I'm not debating that point here. I just wish we could be honest about it and have an honest discussion on the topic rather than call it a crisis. And to prove my point, here's the list of the homes of the cities with the most homes that are missing. New York, Los Angeles, San Francisco, Boston, Washington, Seattle. Those are the most progressive cities in America. These are cities where these policy decisions of all types, most progressive, are in place. And again, I'm not here arguing the policy. What I am saying is, instead of calling it a crisis and pretending like we don't know why, let's debate, should we build more housing stock or not? And if so, where should we build it? Because clearly, just calling it a crisis and acting like we're surprised makes no sense. Zillow is based in Seattle and San Francisco. They know darn well what's happening with the market. Zillow's a very progressive company, very involved with political leaders in California. They know exactly what we're doing. So it's not really a crisis. Really, this is a design policy, and the ramifications of it are people find it hard to buy houses. And again, maybe that's good. I'm not debating that here right now. I'm saying let's just have an honest discussion. But the worst article of the week, I started off by this video by talking about CBS, formerly being known as the Tiffany Network. They have an article I think it's just so offensive as a real estate agent and as a taxpayer, as a resident, as an adult, paying attention as a grown man. They say, what prospective homebuyers should do until interest rates drop. Now, if you notice that title, that presupposes two things. One, you should wait until they drop, what you should do until they drop. They're saying buy your house before they drop. They're saying we should do it until they drop. They give a whole thing, a list of things to do until they drop. Number two, it presupposes rates are going to drop. Interesting, both of those. What should you do until interest rates drop? Well, If CBS News knows rates are going to drop, the headline should be buy a house now if you can afford it, so that when rates drop, you get a free refinance down on your payment. Of course. Every buyer, if they knew rates were going to go down in a year, 1%, 2%, and they could refinance for no cost and lower the monthly payment, every buyer who was on the fence would jump the fence and buy the house. So that's ridiculous. What should you do? You shouldn't wait if you think rates are going down until they go down. The other thing is, it's kind of like saying we should wait until Black Friday to buy a TV set if you get the same price. Of course not. Why would you want to wait in line and rush? If rates go down again significantly, there'll be a rush of new buyers. Why would you wait to multiple offers, wait in line to get into open houses if you can afford to buy now and want to buy a house now? If you don't, you don't. But if you do, why would you wait? But worse than that, CBS News doesn't even believe rates are going to go down. In the article, they wrote the term, as many experts predict will happen in the next year or so. Really? Really? CBS News? Really? Many experts predict rates will go down. Well, it's interesting. There's a hyperlink to another article that CBS News wrote, which was when rates will drop, here's what experts think. This article was written in June, a little over a month ago. But that sounds, wow, when will they drop again? Presupposing they'll drop. Well, that sounds exciting. But when you read the article, they're experts, and I don't know how any of these are really experts. One, Peter Iziak says, if the Fed stops raising rates, rates will drop. Well, they haven't. So that's not happened. Another one, the chief economist of First American, Mark Fleming, says, even if they do go down, it won't be back to the rates of yesteryear. 6% mortgage rates used to be the norm, and that's a reasonable place to expect. Meaning, if they do go down, they're not going to go down by more than 1%. And here's Adam Sharif. If rates go down, it'll be next year and not by much. So really, here's the funny part is, here's CBS News saying, wait until rates drop. And then the article, they're saying, but experts say, I had that highlighted before, experts say rates are going to drop. Then you go to the article, when mortgage rates drop, here's what experts think. The answer is they don't think they're going to drop or drop by much. It's ridiculous, but here's the catch. What do you notice in the middle of this article? You have the headline, the picture, the beginning of the article, the rest of the article. What's snap dab in the middle of the article? Check current mortgage rates. And so if you want to find out what rates are, they're selling an ad to Bankrate, which is one of the worst places to shop for loans online, in my professional opinion. So basically what they're doing, if you really look at it, is getting their readers all hyped up about interest rates being, they're going to go down. Just watch them. Just go onto our website and click on them all the time. Click on them every day. Right. And I even think Bankrate would appreciate that. They want people motivated. They don't want people shopping never going to buy. But obviously what CBS News is doing is writing an article that generates clicks for their ad. They're not writing an article that educates their readers. And that's the thesis of my piece regularly is the news today is not to inform you or educate you. It's to sell their ads. And you need to see that. And you need to talk to professionals to get the insights of where the market is headed and what you can do to prepare yourself. I do think if you're thinking of buying a house, you should prepare. If you're ready to buy now, buy now. If you're not ready to buy now, prepare for when you are. Save money, cut your expenses, budget. Let's talk about that, of course. So what should you do? If you're ready to buy, buy. If it makes sense for you and you can afford it, great time to buy a house. Less competition now. And if rates do go down, you'll get a free reduction in your monthly payment or a low-cost reduction in monthly payment. And if you're not ready to buy, don't. Doesn't make sense. And if it's time to sell, sell. Now, know that there's limited inventory. It's a good time to sell. You can still dictate terms. You can still get a great price. So I think if I can help you with any of that, please reach out to me. My social media contacts and information is down below. Call, text, or email. As always, I'm available for you. And make today your best day ever. Thanks so much.